According to supply managers in the 9 Mid-America states, how is the economy performing?
The economy is moving along pretty well, although a survey of supply managers in 9 states, the Mid-America region, the overall reading was down from February's 56.1 down to March's 50.8. So still above growth neutral. These indices, all the indices, range between 0 and 100, with 50 being growth neutral. So it was reasonably good, and I think the economy here is moving along. What I think we're in right now nationwide is what we sometimes call a rolling recession. In other words, recessions in construction and in other areas like finance, construction, real estate, and also in certain states that specialize, say, in finance, banking and finance, states like New York, where you're apt to see more of a negative downturn. So in this part of the country, based on a lot of agriculture, it was a pretty good reading, again, above growth neutral. We ask about the outlook for the rest of the year. What are the big challenges? And 4 out of 10 said supply chain disruptions. No surprise there, since these are supply managers, so they're concerned about that. 3 out of 10 said labor shortages, which is also not very surprising. 2 out of 10 said higher interest rates. I would expect that to be a bit higher. And only 1 out of 10 said higher inflation. So inflation is not as big a bugaboo for these supply managers in the 9 states, stretching from North Dakota, Minnesota, and north to Oklahoma and Arkansas in the south. Now I bring up the chart here showing Creighton's there in blue, the Creighton Mid-America region. You see down there it dropped significantly. I think the outlier is not March, it's February. The February number is, I would argue, is higher than it should have been. And there you see later on this morning you'll see the national number, which comes out. It'll probably be, I would argue it'll probably be up a bit, but still probably below growth neutral.
What were the hiring trends?
Hiring was also around 50. In fact, it was a solid 50.0, and that's down from February's 52.8. So the labor market's slowing down, but still adding jobs. And we ask about pay raises for this next year, and on average about 3.4%, which sounds weak, but it's still better than what we recorded, say, 6 months ago. Increases are significantly higher for those that are job changers. So those that remain within the job, much slower growth in terms of wages, again, 3.4%. Only 13% reported an upturn in March hiring, so over February's level. I think what we're seeing nationwide and in the region is what I'll call labor hoarding. In other words, individual companies are just very reluctant to lay off workers, to fire workers, to get rid of workers. They're in fact hiring workers even in cases where they don't really have that significant demand, just to guard themselves against an upturn in the economy and in their businesses. And overall, the last 3 months annualized gain for Mid-America was 2%. That's annualized. That's pretty good growth, 2%. But it's below the national number, which was 2.6%.
What inflation trends are you noticing?
The price gauge was up. This is, of course, the wholesale inflation gauge, up from January, I should say. Now it was down from February. February was 80.6. The March reading was 77.1, which was down from that much stronger reading of 80.6. But again, it's up from January's 74.2. So we're still seeing excessive inflationary pressures at the wholesale level. The PPI, though, at the national level, registered a decline for February. That was very surprising. But if you take out less food and energy and trade services, it was up by 0.2 percentage point. So there's still a little too much inflationary pressures in the pipeline. I expect the Fed, and we'll talk about that later, to raise rates at their next meeting.
What is the economic outlook?
I think we're seeing what I'll call a rolling recession, where we're seeing a recession definitely in housing, office construction, very difficult times there, particularly in downtown office buildings across the region. Financial activities, some real issues there with banking, of course, but also some of the other related finance organizations, those individuals that have jobs in finance. We're seeing the CPI inflation month over month is still too high. I think it'll rise by 0.3% from March, when that number is recorded in April, when we see the number in April. We're talking about the Federal Reserve, in my judgment, will raise rates again by 25 basis points. That's 0.25% when they meet again on May the 2nd and 3rd. That's the next meeting of the Federal Reserve. Short-term interest rates, again, will rise by that same number, 0.25%, 25 basis points on May the 4th, and that will be the announcement will be on May the 3rd, the Fed's announcement. The prime interest rate will rise from current 8% to 8.25% by May the 4th. It's getting a little tougher for those, for example, who are buying automobiles. Interest rates on those automobiles rising. Long-term interest rates will move higher, but that's being a lot more sticky, thank goodness for home buyers. I do expect it to rise above 7% by the end of July. Now that's the 30-year mortgage. Investors out there, those policymakers need to keep an eye on the bond market, always the bond market. Although the stock market's giving some good indications, but keep an eye on the bond market. Particularly the yield on the U.S. Treasury bond is now down to 3.5%. 3.5%. That's down to almost 4%. It almost touched 4% earlier this year. That if it moves back above 4%, you can say that the economy, the fear of a recession is diminishing, but the fear of inflation is growing. So that's a trade-off. Keep an eye on that. If it moves above 4%, less likely of a recession, more likely of inflation. Keep an eye on the ISM number that comes out later on this morning. As I said, that's the ISM manufacturing reading. I think it will be below growth neutral, but higher than last month, probably approaching 50, about midpoint of what ours was, the Creighton University. Price of a barrel of oil, keep an eye on that. We're seeing it beginning to rise again. It dropped down to $67 per barrel in West Texas crude. It's now back up to, say, 75. It's likely to continue to increase there. I expect that to happen. But listen carefully, not so much to economists like me, but listen to those who serve on the Open Market Committee, that's the FOMC. They set interest rate policies. They'll be telegraphing to all of us what they're going to do on May the 2nd and 3rd, and that's very important. And thank you for joining in. This is, of course, Ernie Goss here, a professor of economics and McAllister Chair at Creighton University in beautiful downtown Omaha, Nebraska, reporting on our March survey of supply managers in the 9 Mid-America states. Until we meet again on the first business day of May, may your economic cup runneth over, and thank you.